much all the stocks that we trade has recently reported its half-year result for FY25. We're going to be looking which one are the winners and the losers, and whether some of the losers we could position ourselves, maybe not now, but in the future, as results still came positive, even though the market reaction was negative towards that. One of the examples is Kogan. Kogan, it is a stock that fell right at the day of the report and the next day, but had a huge reversal on the third day. And I'm going to be sharing here, reviewing, because my last video was about Kogan and the reasons why we were buying Kogan based on the report despite the negative market reaction. I'm going to share it with you today. Also, we'll be talking about Zip, EML Payments, which had an absolutely amazing day today. Also, Cettire Limited, which reported, and a little bit about Appen as well. Appen is the only stock that I haven't actually had time to look into the fundamentals. The reason is because I'm being so busy with the stocks that we actually been trading and couldn't actually look at Appen, but I will be doing that with you right now in this video, sharing how I normally look into key fundamental metrics to have a good feel of what the fundamental outlook, and obviously matching with the technicals and make what we call multi-dimensional trading approach on those stocks. Also, at the end, there is one stock that I really like, and it's currently trading a technically discounted price. The stock came off quite substantially, and the results wasn't that bad. That could be a really good opportunity if bought at the right price. Let's have a look. Remember, guys, this is not a financial advice. Just as from BG Trading sharing with you how we apply BGS20 and BG Trading strategies together with our VIP members to chase 20 to 40% trading opportunities with a very tight stop loss. Stocks that normally offer a very positive fundamental outlook in a sector that is prone for a rally, and also stock that is trading at technically discounted price, because the easiest money is when you buy something at discounted price. You don't even need to wait the stock to move towards FOMO area. All you do is just wait to come back to a fair price, and then you already made your trade. You already made your money. Sometimes we have gaps of 30 to 50% on those particular opportunities, and I'm going to be sharing with you as the last of this video. Before yesterday, I issued the analysis based on the first half of FY25. There's a video out there, but what I want to show you is straight into the chart formation. And I mentioned there was some strong hypothetical support levels right there. But then we had this, what we call like almost like a bullish engulfing. This definitely is what we call a strong reversal, because from the interpretation that we have right there is that this huge sell-off here is annulled by this huge buyback, and followed by what we call bullish intersection level 2. For me now, that confirms the fact that Kogan is now back into the bullish side of the EMA 9, which is what we call the exponential moving average, still trading at technically discounted price and is prone to a bounce. Remember, macro outlook in Australia after interest rate cut is positive. The results that Kogan reported was also positive in pretty much all the key fundamental metrics. So it's all positive. So there is no reason to freak out, even though the market sells off. So what we do then, we just find value points, and then we buy the stock at significant value and wait for the correction towards the upside. Once that comes up, then that's when we made our money. So that's when we make our money actually. And then we just sell at the target. Obviously we have targets for Kogan as well as all those stocks that we'll be covering today. Even though some of them we are not actually into the position, but we are trading Kogan right now as we speak, together with some of our VIP members that have chosen to. Now, let's start with Cettire Limited. Look, if you've been following us long enough, you know that we have been trading Cettire. You know that I endorse the business model. And let's take a quick look on the key fundamental metrics that I like here on today's report. And then after, we're going to be looking at the fundamental metrics that I don't like, that concerns me a little bit. No, and then it's all pretty much aligned with the macroeconomic outlook, which has shifted a little bit on this for this particular company. I'm not talking about the retail sector. I'm talking about this particular company. Now, let's take a look at this. Record gross revenue of $514 million, up by 12%. That was a modest growth, but it is within our modeling. And our modeling, as per our last quarter result analysis, we mentioned that we are looking at seeing revenue over $1 billion, similar to what Zip's been doing in terms of revenue, which means Cettire is still growing, is still presenting strong numbers, even though macro is looking a little bit choppy at the moment for this particular stock. And we're going to go in details shortly in this analysis, right? So record sales revenue up 11%, then record active customers, proving that customers are still buying through their platform. This is a very important metric because it shows how reliable the platform is. So still 21% increase year on year. So record active customers. So all those key metrics are pretty much in record. So record repeated customers as well. Contribution 67% of gross revenue. So up from 58%. So yeah, it's improvement over there as well. Average order value also increased from 791 to 821. So obviously there's inflation and the products tend to go up. Now we don't see the margins. That's where the concern is now at the moment. But I wanted to highlight the fact that the market already priced there quite substantially over the last 6 months, pretty much, on the share price. So profitability and margins, okay? Bottom line here, even though I have actually highlighted as a red flag here, so we're gonna go one by one. Now, delivered margins has shrunk 14%. Adjusted EBITDA has also shrunk 54%, that's bad. Adjusted EBITDA margin is also down from 7.4% to 3.1%, and net profit after tax 63% down year on year. Remember, the Cettire has shifted its high profitability into this sort of a gloomy period, still as a result of a multi interest rate hikes that we had in the US and in Australia, and still sort of on a back end of that cycle. Bottom line is negative, but it's still profitable. Has still show the market that was able to generate $4.7 million profit in this this first half of this financial year. And then we have more details right there. But the thing that also concerns me here is that the short-term macroeconomic environment is not the best. It's not the best. So look at this. Market contraction. So there is a decline of 2% in 2024 in luxury market experience. And that is the first decline in 15 years. And I'm not talking about Cettire Limited itself. I'm talking about the whole industry. And this is data that the company gathered from very reputable sources. So essentially, in a very short term is negative, but the forecast still suggests a huge growth by 2030, which suggests that we will see immediate growth in the next few quarters, most likely, and their growth are likely to come as a result of a multiple interest rate cut in the US. So now we sort of changing the stage of the economic cycle. Take a little bit time to flow this money to flow through the economy. So another thing that concerns is the geopolitical influences, potential US tariffs on European luxury goods, and that could impact pricing strategy and profit margins, okay? And ultimately testing the resilience of the luxury brands in maintaining their pricing power. So it's always negative. There's no confirmation of that yet. So we see what Trump's tariff policies will be in the next few weeks, few days, few months, who knows? But that makes a little bit of uncertainty. Even though I think this has already been priced in, but if eventually Trump comes up in putting a tariff in Europe, then obviously we might have a further sell-off and a breakdown to the downside. Right? So technical analysis, let's jump straight in. So these analyses are all available for our VIP members in our stock analysis library, by the way. So if you have time, if you are a VIP member, just go in our library and we'll be able to look in detail every single aspect of those analyses, right? So Cettire Limited is not the best right now, but there's one aspect that I like in CTT, that's the code, by the way. One aspect I like is that has been hardly sold. So here's is where it's trading at the moment, $1.10. It has tested $1.05 in June 2024, and then had this huge rally. Let's just measure how much the rally was on the second half. So was 168% rally there. Then we had another rally right here in December 2024. That wasn't that remarkable. It was only 40%. If eventually there's a coverage, because the stock reaches a point, a level that offers strong value, which I think it is pretty much close to that, then obviously we could see a huge short squeeze. Now, it is de-risked, as the market already know the result. The market already know that company is still growing and is still profitable despite a gloomy scenario. Then obviously we still need to see a strong reversal. This one has to be careful and make sure the stock doesn't break out this $1 multi-year hypothetical support level. Okay, so that is CTT. Careful on this one. Now let's move to the third stock today, which is ZIP. This is our favorite stock, right? Are we holding ZIP now? No, I'm not holding ZIP now, and I'm going to share why. Okay, why I'm not holding ZIP? First of all, I decided to sell ZIP just prior to the date of the report, and then ZIP has rallied about 10%, 12%, something like this, and then has shredded its part of its profit today from the share. The result was very positive, to be honest. As you can see, total transaction value also increased, and then I like to compare ZIP with Cettire because the numbers are fairly similar in some ways. So total transaction value of 6.2 billion. So obviously ZIP tends to be a more sensitive business towards interest rate cut or interest rate hikes. Okay, so total revenue has increased as well by pretty much 8.2%. The revenue came about $509 million. So pretty similar to actually Cettire. If you look at Cettire here, the revenue, what's the revenue here? 515. So Cettire is a little bit in front of ZIP in terms of revenue, right? And so coming back to ZIP, okay. So coming back to Zip, the only red flag was big red flag here. The market actually didn't care much. Was the net profit after tax. So you can see 68% decline year on year. So if we compare with Cettire, net profit here down by 63%. So 63% down in year on year for Cettire, and Zip 68% down. So the profitability for the first half, Zip is considerably higher than Cettire though. Obviously that puts Zip in a far higher valuation than Cettire. So we have to reevaluate now, and the fair price for Zip now is giving or taking where Zip is trading right at the moment, right? So I'm not going to go in detail with each market that Zip has grown and the numbers, but I can tell you this: US still remains the main market for Zip, and Australia has declined, which is no good, but it was actually pretty much 40% of the revenue. It's not that small though. So just got to be careful with Australia, but they are reevaluating the business and setting up strategies to increase business in Australia. So Zip is performing pretty well. Now let's take a look on the chart formation for Zip. So the day of the report, Zip has gone up quite substantially, right? Now the problem at the moment with Zip is the chart formation. So it's trading at $2.60. Right, and it's still the RSI, the relative strength index, is still showing that Zip is in the short-term downtrend as per the chart formation. Now the question is, would the fundamentals outpace the technical aspects, or the technical will prevail? So that's what we're going to see in the next few days. Having said that, as the fundamentals still have been improving, apart from the net profit after tax that has reduced, but there was a reason why it was reduced. There was a one-off income item in the last year, and if we take that out, then I'm pretty sure Zip is actually increasing its net profitability. Statutory net profitability. So it's positive for Zip, to be honest. The only problem is it's trading at technically fair price at the moment. So when the stock's trading at technically fair price, means that, look, you buy at the fair price, pretty much. Should we buy at the fair price? Yes, not too bad if the fundamentals are improving year on year, right? So the only problem is with Zip at the moment is still this bearish RSI formation, which is kind of like a bearish, was a bearish divergence here, then became a bearish convergence, and now it's putting pressure every time the stock reaches about 57% on the RSI. So you just gotta be careful. The key thing here for me is to see Zip breaking out from this downtrend and then changing its behavior and becoming bullish again. So we have to see the next few days, but I would love to be buying Zip again at technically discounted price for the long term. Whether that's going to happen, I don't know, but I'm taking a little bit cautions on Zip right now, only because it's trading at the fair price, and we try to buy things at technically discounted price. That's pretty much it. And if it is a breakout of this downtrend, I reckon Zip would quickly reach $3.50 level. This, and will test this like a long-term resistance level there, and if end up testing several times, then we could see a breakout to the upside and see Zip moving towards $4, right? By now, let's even see if there is an offer range here. Well, I guess there is a range, 24% range right there for Zip. but it needs to break this out. See, this thing needs to be broken and to become a bullish. So that's ZIP. Waiting to see if I can get ZIP for a better price again. Okay, now let's move to EML Payments. Up by 14%. Before going to the charts, let's take a look why the stock has gone up that much. And it is, by the way, in line to our expectation because we bought the stock together with our VP members about 2 weeks ago. And we now up considerably, which is great. Now, statutory net profit of $9.5 million. So it's a huge turnaround from the last financial year. Underlying EBITDA positive, up 50%. Total revenue up 15%. Customer revenue up 6%. Cash at the end of the period, $50 million, which is positive. Positive performance in Europe, which is the main market. So that you always got to look what's happening with EML in Europe. And 30% up in revenue from Europe. And 71% in interest revenue. EML holds the money between the transactions, and that's when they get revenue from interest, pretty much. So North America has decreased revenue, 7% down, but because it only contributes a little bit for the overall revenue, as you can see here, majority of revenue comes from Europe, then there's not a big issue here, I would say. Asia Pacific also gone up 5% in revenue, which is fantastic. So it's still growing. So the cash flow obviously is positive again after many years of burning cash. And the potential risks are regulatory challenges, execution risks, say that EML is unable to execute. It's what they are calling 2.0 strategy. Then obviously there could be a issue, and then obviously competition. Now the thing with EML, we put it two scenarios here, and this is the second analysis that we use two scenarios to forecast the share price. This time works really well. The only thing is the revenue has been adjusted slightly to the lower side, but it's still on a higher guidance. Okay, on a high guidance, we'll be looking at full year revenue of $230 million, and the lower end will be 207, which should put EML Payment, if this if the EBITDA comes within these brackets here, which should be putting EML share price, I would even say around $1.50 if that happens. But let's see if the market buys this stock again. Just not an impulsive entry today from a lot of different traders or investors. So you gotta see for the long run what happens with EML. So now obviously we're gonna be trading EML, so we're gonna be getting out at our targets, and then we will be reappraising again whether we should be buying more or not. So EML now is currently trading at 98 cents, 14% up. Bullish intersection level 1 and level 2 right there, confirming that EML is now back into the bullish side, right? And RSI very, very high right there, suggesting there has been a little bit overbought, but I think there's more room to keep moving up over the next few days as the result is very positive. That's exactly what the market was expecting in order to reassure the investing or trading back into EML. So for us, EML is positive, still moving up. I would be only adding up. I would be buying now. I would be only adding up into position. But as I said, we already bought because we saw this strong reversal right there. And we had a fairly good idea of what EML was about to report, right? In fact, it is exceeded a little bit our expectations, right? So EML Payments. It's not here. Haha, because I haven't actually looked at it yet. So Appen. So the last analysis that we done Appen was back in here. Was on the third quarter of what they call financial year 2024. Remember, the Appen reports as per the calendar year. And even though we traded App for 70% profit in 2024, I have video warning that our projection for the full year would be negative. And the reason is because we strongly believe that Appen is not actually taking advantage of this AI revolution. There's something off in there. And therefore, we had a huge concern. In fact, this analysis was published in 6th of November, and I explained that revenue was still lower year on year than when they had Google, and when they lost Google account. So they couldn't actually, after 12 months, after like 3 or 4 quarters, they still unable to bring the revenue into levels beyond what the company had before losing Google, even though they getting a lot of new clients, especially in the Chinese market. So obviously the EBITDA numbers has been improving, but not enough to get market confidence. And they also off about Appen all the time, even though we traded. Now let's take a look quickly what happened to this full year result right there. Let's go to investor presentation. Will give us a fairly good idea why Appen has crashed today. Pretty much in line to what I thought, I think, but I haven't actually looked that in. So China division revenue, great, okay? It's going up, but if you see, it's even like 71% growth, right? The numbers are relatively small. We're talking about 7.1 million dollars here to 17.7 million dollars. That's very that's not great numbers, really. It is 71% growth, but it's still very low levels of revenue for a company like Appen for the growth that the market was pricing in. So now obviously they come up with all the beautiful metrics before, so they know exactly how to report. But what I wanted to look is into the underlying EBITDA. So underlying EBITDA for this last quarter was positive, so it's still positive, is still improving. So in fact was profit of $4.7 million, continue to return into profitability. So it's positive. Now let's try to understand why it's fell. So revenue is still down 14%. Now, how come Appen couldn't start growing exponentially with this AI revolution? That's my question. Okay, so revenue decreased 14%, reflected by termination of a Google contract. Underlying EBITDA has improved. That's definitely positive, right? But I think the problem lies here on this revenue growth, which is not happening. We probably need a few more quarters to see whether they will pull up some strong growth with the new accounts. It's not really happening, and that's what concerns me really for Appen. We want to see huge growth. Remember, Appen is what they call walking stock. It's like it's a growth stock. doesn't pay any dividend or anything. So it's gonna make sure we understand that. So essentially, this is the problem lies as well, a statutory loss of $20 million. In fact, I actually forecasted that type of loss in our last stock analysis. Let's just take a look, which I issued later 2024, I think it was October or November. Let's just take a look, 6th of November. Somewhere here, I had forecasted, and I inform our VP members that we wouldn't be trading Appen after the 70% profit trade that we did, because the projection for the full year would be a huge loss still. So in fact, so this is item number 3, full year estimated result. So adding the estimated key for EBITDA, which we thought would be about 0.9, actually exceed our expectation on EBITDA, to the year EBITDA. So we would be expecting a net loss around 14 million. And we thought if Appen is still reporting a net loss of 14 million, and the stock price would be trading around $3, we thought that would crash, and it was exactly what happened. So we got right on this one. So very, very good. Now, should we be buying Appen again now that we have the result? Let's have a look. Let's have a look where are the entry points for Appen, for the brave ones. So this once again proves that fundamentals always prevail. And even though we have like a really good technical indication, you got to make sure you understand the fundamentals in order to make long-term trading decisions or investment decisions. So in this case, we want to take advantage of the hype and the rally, but we knew that the company would be still reporting huge losses. There was a remarkable improvement, but it's still reporting huge losses. Now, the buying areas for Appen based on the chart formation is, again, buying at technically discounted price. If you want to learn how to identify technically discounted price in all the stocks, so go to bgtrading.com.au and take a look at our online trading course. Now, as you can see here, this is the long-term moving average, right? So we want to be buying stock below the long-term moving average. Stock there has potential to grow in earnings. Like Appen has potential to grow in earnings, it's just not doing enough, strong enough for what the rally was. So now, would I be buying Appen right there? I probably would try buy Appen anywhere below this long-term moving average, okay? That's what I probably would be doing. But now the market is shorting. So what's going to be the target? I don't know. We need to see a formation here. We don't know exactly what's going to happen right there. It could fall another like 15%, 10%, 20%. In fact, Appen could go around $1 again. Who knows? But most importantly, it's still not improving the way we wanted the market was expecting to improve. Entry price for Appen. Ideally, we want to see a textbook reversal confirmation just as we saw in Kogan. So this is our second last stock. Now let's take a look at PolyNovo. PolyNovo is a stock that I really like. It actually has gone down quite substantially. Has reported pretty positive, to be honest. Hasn't grown as the market was expecting, right? But it's trading once again at technically discounted price. So this is, for me, it's pretty much around buying levels right there. Let's take a look on quickly on the full year results. for PolyNovo on the key fundamental metrics. So revenue is still increasing, which is fantastic, increasing in pretty much all its products. The group revenue 22% up, which is great for a growth stock. A growth stock, you want to see revenue increasing. The problem was obviously like the net profitability, which only growth a little bit, not as much probably what the market was expecting, but it's still positive. So essentially, let's take a look at this, the income statement. So revenue up 22%, EBITDA also up, net profitability up. What else do you want? Seriously, let's see how much cash they have on hand. Here is a problem. So cash and cash equivalents has declined a little bit. So 33% decline. But it's still, that's because it's a growth stock, is actually investing, and they are managing its profitability pretty well, I would say, since they became profitable. So look, it's everyone's discretion to buy stock, but I gotta say I like this, and I'm going to be putting a full video analysis in the next few days, hopefully, for PolyNovo. Just keep that on your watch list. We like buying high quality businesses at technically discounted price. This one ticks the box for us. Let us know what you think. Thanks for watching to the end, and I'll see you in the next video. Bye.